What's going on, guys? So I had to reshoot this video, uploaded it, figured out that the mic was turned off. So we're going to go ahead and film this video again. We're going to kind of go through some key points that I think everyone really needs to focus on if you do want to be a more consistent trader. One thing that I do kind of want to talk about is that, you know, if you're not back testing, okay, so I teach various different strategies in evolution traders, but one of the strategies that I like for scalping is going to be using the 5-minute time frame. It's going to be using the 20 SMA. It's going to also use a 1-bar stop with technical reasons why we should be getting into the trade and technical reasons why we should be getting stopped out of the trade. Now, what I kind of want everyone to kind of realize is that, you know, I've been talking about it a lot, but we need to understand that, you know, as humans, we have two parts of the brain that are going to be working when we're in these trades. That first part is going to be that frontal cortex, which is going to be the logical side, that thinking part of our brain, where kind of right now when the markets are calm and the markets are closed, you know, there are no candlesticks kind of moving, we can easily digest these charts and see the clear picture, right? But it somehow seems that, you know, once the market is on, once the market is live, once we put real money into these trades, we somehow then to, you know, get all emotional, become emotional wrecks. Well, there's a piece under that frontal cortex, which is, you know, tied to the emotional state of the brain. And that emotional piece of the brain is actually what controls your actions and things that you're actually doing in the physical sense. So, you know, once you do start to feel stressed, once you do start to overtrade, you start to click buy, sell, you start to panic, you start to, you know, feel anxiety. That's the emotional side of the brain kind of taking over that frontal cortex. And what we really need to understand and identify in those particular situations is either A, stop trading for the day or for that session, or B, kind of walk away, take a walk, take a deep breath, and understand that, you know, we need to get back to that logical piece of the brain, understanding that, you know, with our strategy, it doesn't matter if you're trading my strategy, you're trading someone else's strategy, you're trading your own strategy. What you really need to understand and identify is that each strategy is going to possess an edge if we can follow that strategy to an edge and let the probabilities just play out. Probabilities in trading is very, very important. We have to understand that, you know, we're not going to win every single trade. We're not going to win, you know, sometimes half of trades. We might take a streak of losing trades, but if we allow these probabilities to play out in our favor and protect our edge and use our edge and utilize it to the best of our advantage, we can be profitable, we can be consistent. So let's go ahead and do some back testing here. And remember, when you're back testing, I want you to physically, mentally put yourself in this trade as if the market is going live. I want you to run through the scenarios and kind of tell yourself, what would I do in this particular situation? How would I be feeling in this particular situation? Where should I be thinking about taking profits? Where should I know I need to be stopping out at? So let's look at the first setup that we get. We get our reason why candle here at 6:35 a.m. Pacific Standard Time. We're looking at the NQ here, 5-minute time frame. Get our reason why candle here at 6:35. So what I'm going to automatically do is I'm going to put that hard stop loss over that 1 bar, which is the top wick here. That stop out price is 15,719. We are going to see our pivot down here at the bottom. So we're going to put another level here down at the bottom. This becomes our pivot level of a reason why. We're looking for the next candle to confirm, which it does. Now this next candle confirms, but then gives you a rather aggressive bounce here, being that this opening candle was about a 60-point range. One thing that I do want to point out is that even though the candle is 60 points, we need to play size accordingly to you know, what the range is here. We can't be going in 5, 10, 15, 20 mini contracts here and run the risk of getting blown out on the first trade of the day, losing our funded accounts, losing our personal accounts, blowing up, this, that, and the other. I still recommend for everyone to trade micros, even in this particular case with a 60-point stop on the NQ. I would definitely be trading 2 or 3 micros. I mean, even if we look at the 60 points times 2 or 3, we might only be down $250, $300 and some change by the time this is all said and done, if this trade continues to you know, fail. However, a lot of traders will get into this trade here. They'll see this aggressive bounce. They will try to be some sort of hero, and they'll try to stop themselves out before it hits their stop loss, or before it even hits their trailing stop loss, which is a 20 SMA. And then they'll see the move continue to bounce and think that they did something really, really good, only to look back at the charts 30 minutes later, an hour later, and see that they missed out on a potential 200-point move. And that's what I want to kind of really focus on, is this first initial trade here, and that's that 200-point drop below the pivot of around 15,655 all the way down to a price of 15,458. So you can see this is almost a 200-point move here. If you would have let the probabilities play in your favor by trusting your hard stop loss, by not trying to be a hero and stop yourself out early because you think you're doing yourself an injustice here by, or a good service here by getting out early and potentially saving that 60-point loss, only to see the move go down in your favor for 200 points. So again, how would you be feeling on this bounce? If you're sized too heavy, you're going to be feeling some pain. If you're sized okay and you're sized small for your account size and for this particular setup, you're not going to be really feeling too much pain, even if it does stop you out. What's $200, what's $300 on an account where, even if you're trading a funded account with $2,000, $3,000, $4,000 worth of drawdown, what's a $200, $300 loss, right? Because we have to understand that probabilities are going to come back around in our favor. And when they do come back around in our favor, we need to have the capital to be able to take those trades. Now, again, if you would have let this trade play out, there should have been no reason why you didn't catch at least 50 or 60 points, or even 70 or 80 points, or even the whole 200, right? On a runner. Maybe you took, profits at around 30 or 40 points on initial size, and then you allowed this to bounce and fail, and then you took profits on the next leg down here. You could have captured close to 100 points, give or take. So again, I want you guys to keep that in mind. Now you're going to notice here there's a lot of choppiness action. There's quite a few setups that are getting confirmed and getting they're starting to fail. Again, if you guys are in evolution traders, I put out some content for you guys, first two, last two. I would like you guys to go watch that video. If you guys are in evolution traders, watch that lesson guide on their first two and last two. These trade setups here we kind of want to ignore, and I kind of explain why we want to ignore them. However, I also want you guys to kind of identify here too that the trend on the day is down. We're going to be ignoring the long setups on a downtrending day, so we would not be even looking for the longs. However, even though the shorts do confirm, they still kind of stop us out as well. But in this particular situation, even if you caught 50 points, 100 points on this move, and you got chopped up for 20 or 30 or 40 points here, by the time we did come out of this move, we did get another setup here that ran from 602 all the way up to 652, which is 40 points. We got another setup here that ran down another 50 points. So again, these two setups here were 100 points. Even if we lost 30 or 40 points here, we should have captured 100 points here. So even if you were taking every single setup on the day, you still would have been profitable. And that's the power of probabilities. That's the power of, a lot of times people come into the market and they might get chopped up here and think that, they don't know what they're doing, or they get frustrated and then they start blowing up accounts, but they're not allowing the system to play out. And the system is not just my strategy. It's any strategy. You're going to go through a string of wins and a string of losses. But if you can stay and manage to be in the game and continue to take these plays with your edge and using your calculated risk, you will come out on the other side as a profitable trader. So again, this focus of this video and what I need you guys to do is backtest your strategy, to put yourself in the trade mentally. What would you have done in that situation? Would you have taken that trade? Where would you have taken profits? Understand that the average true range here on the NQ is anywhere between 20 and 30 points per 5-minute candle. So if you're not comfortable trading or being in drawdown 20, 25, 30 points, you need to either size down or go trade the ES or trade a smaller time frame. If you look at like something like the 2-minute time frame, you're going to get a little bit more choppiness action here on the 2-minute time frame. But your average true range here on a 2-minute time frame could be anywhere between 10 and 20 points, 10 and 17 points, 22 points here, around 20 points here. So if you want to trim that down, maybe trade the 2-minute time frame. But again, I tell everyone here, look for scalps taking 1-to-1 on your first initial size. So if the average true range is trading between 17 and 25 points, if you can manage to pull 17 points, 20 points, 21 points, handles, whatever you call it, ticks, everyone calls it something different, right? If you can pull 20 handles or 20 ticks off of a move in an average true range between 17 and 25, you're doing a hell of a job. And if you can continue to identify the setups and continue to follow your strategy, you will be profitable. But it's all about sticking to the game plan, and it's all about back testing yourself. What you want to do is come into the markets with a clear head already, and understand, hey, I will lose some trades, but I'm also going to make some trades if I let probabilities play out. I hope this video helps you guys. If you guys want more information, you guys want to trade with me, you want to get access to the entire system and strategy, and trade with the rest of the guys, make sure you guys check the links down in the description box below, and I will see you guys on the next video.